Welcome back here, boys and girls. Welcome back. Welcome back. You know what time of day again is here, folks. 8 o'clock Eastern Time, Monday through Thursday. Welcome back to our nightly newsletter. Today is the 27th of March, 2014. We are cruising on here, guys, into the end of the month, the end of the quarter. Before we get started today with our newsletter, I want to remind you guys to join that free trial. You can learn all about the who, what, where, when, and why. All the information you need to learn about membership with School of Trade. Check out the free trial. I'm going to send you a special invitation to attend our live trade room in the afternoon, and I'm excited to have you with us. So make sure you join the free trial, and you can use SchoolOfTrade.com and learn about all three of our membership levels. Also, over here at SidewaysMarkets.com, please don't forget, if you're watching this video on something else besides our blog, make sure you head over to SidewaysMarkets.com, and while you're here, make sure that you register on the left-hand side for our nightly newsletter, and then there you can grab a copy, grab a free pass to attend our live trade room as a guest. Now that you know more about the information on the blog, let's jump right into it. Had a very, very slippery and sloppy, chaotic day today. Markets really reacted, chaotically. It was some mixed news today that we got in the markets. Crude pushed higher overnight. If you remember last night's newsletter, I talked about I was going to be sitting on hands with crude last night. Gold dropped just like we had predicted. So very effective trade on gold, and same thing on Russell. So Russell also tumbled. So the only thing we really missed over the last 24 hours was we didn't really know what direction crude oil was going to go. Crude decided to go higher. If you remember yesterday, we talked about buying crude, but we were worried about that 100 big round number. Well, the trade ended up working out, but I was on the sidelines watching. So looking over today's trades here, no trade on crude. I'm talking about trades that were called last night on the newsletter. So last night on the newsletter, we talked about sitting on hands on crude this morning, and that's exactly what ended up happening. We ended up pushing higher on crude, but we had that big round number of 100 below us, which was a little bit concerning. So stayed away from the trade on crude overnight. On gold, boy, I'll tell you, you guys can see the chart down bottom here. If you scroll down, you'll see the chart below the video today. We literally missed that entry by 6 ticks on gold. Really disappointing, too, because it went all the way. If you guys recall, gold went up, just barely missed it, and then collapsed. We'll take a look at that chart in just a moment, but we literally missed that entry by 6 ticks. It was frustrating, but hey, that's the way it goes sometimes. The wonderful part about being a trader, though, is that trades are just like buses. If you miss one, just stick around. There'll be another one coming right around the corner. The Russell, though, this was the big winner overnight, so no trade on crude, just barely missed that trade on gold. Made our money, though, on the Russell, selling short from 60.2, targets at 47.1 and 43.5, $1,500 per contract on that winner on the Russell. So this week here, guys, if you've been following along the trades we've talked about this week in the newsletter, just the newsletter trades alone, you're up big time right now on the week. Here's what happened today in the markets. So those are the trades we talked about last night in the newsletter. Here's what happened in the markets today. Crude oil, very bullish overnight, and this was actually exactly what we talked about last night on the newsletter. If you remember, my big concerns were that we were going to have some news in London. Remember that? We had retail sales in Europe overnight. It was actually early morning in the U.S. today. But that news in Europe in the London session, right, 3 a.m. till 7 a.m. Eastern time, that pushed that crude price up overnight. And then what happened was we just sat there and traded sideways for the rest of the morning session on crude. We got a little rounded top, and so right now we're wondering, are we going to come tumbling back down, or we're going to push higher? My gut tells me we come tumbling back down, but my gut is not a very reliable trading strategy, so I'm going to trade the pattern instead, like I would recommend all of you to do. So bullish overnight, but again, sideways in the U.S. session. So if you're with us in the trade room, we didn't really get much opportunity at a crude today because by the time we got to the U.S. session, we were trading sideways. We had a pretty typical range today, 167 ticks, and a closing print above that 101. Now, guys, remember, I'm looking at 105 down to 95. That, in my opinion, is within striking distance of $100 a barrel. Right now, we're at 101.38. And the reality is the way that price went up and then traded sideways today, my gut tells me we go back down because the volume was in the middle. We didn't really see any conviction of that move higher from the U.S. traders today. I'm going to show you a chart of that in just a moment. Moving on, gold. Now, gold, this should be nothing new. We've been talking about this for a few weeks now. Gold broke below its key support. I told you about this on Monday. And today, it kept dropping below 1,300. Nice wide trading range. And we got a closing print. Here was the most important thing. We closed today below 1,300. So the sellers on gold are making a handsome return this week, and we have been anticipating that all week. So very accurate guidance here in our nightly newsletter for all you gold traders. Mini Russell, slightly bearish with a little bit of consolidation, right? Maybe a lot of consolidation. Now, this should also be no surprise to us today, because if you listened to our newsletter last night, my exact words last night were, we had a 350 tick range on Wednesday. Now, we talked about this last night. We said a 350 tick range is like the Russell running 2 marathons in one afternoon. You're going to need to take a break the following day. So that's what happened today. Today was that break the following day. Now, we get a lot of really important clues on the charts for the Russell, so stick around because I'm going to go over those charts in just a moment. We had a very narrow range, as expected, and a closing print here, 1148. So not a lot to be said about the Russell except for, again, wait till you see the anchor chart review in just a few moments, and you'll see what I'm talking about. You're going to see why it was so narrow today. It wasn't just because of the big range yesterday. It's amazing how a lot of these technical things set up on top of each other. So a wide range yesterday, and then we got some significant anchor chart support to work with for tomorrow. Stick around. We'll take a look more at that right now. News today. We had 3 news reports on the calendar today, 2 of which were at 8:30 a.m., and they did nothing for us. It was amazing. I mean, you had the Russell that just kind of fell out of bed right at 9:30 but didn't go very far. We were expecting a lot better reaction, a lot bigger reaction, not really better, but we were expecting a lot more volatility after that 8:30 news. But basically, all of the news reports just canceled each other out. At least that's what it felt like. At 8:30, we got what would be the headlining number. This is the last bit of the fourth quarter GDP from last year, from 2013. We saw softer growth than the third quarter, but it wasn't as bad as they were expecting. So it wasn't as strong as they wanted it to be, but it wasn't as bad as they expected it to be. So it's kind of like, well, all right, not really much to think about there. And then he had jobless claims. So the GDP was a little bit disappointing. And we're really starting to highlight now the fact the fourth quarter of last year really took a nosedive. Blame it on the weather, blame it on the end of the year, whatever you want to call it, but we definitely see that GDP now confirming that. Then you got the jobless claims. Now, jobless claims, incredible. Explain to me this. Every single month, we've seen disappointing non-farm payrolls, right? We haven't seen very robust job creation. So either everybody's just dropping out of the job search, or I'm on a different planet right now, because these jobless claims continue to fall lower. Now we're at a 4-week average, the lowest in 6 months. But again, it doesn't feel like it. So we have a very big disconnect between the jobless claims report and what we're actually seeing in the economy. So very interesting there. So jobless claims come out bullish, GDP comes out bearish to neutral, so they kind of washed each other out there. I think a lot of this has to do with the fact that we pretty much knew what the GDP was going to be, and I don't think anybody really takes the jobless claims seriously anymore, because clearly they're not impacting what's going on. Right now, the only number people are watching, apparently, is those non-farm payrolls. And remember, folks, non-farm payrolls will be next Friday, so very curious what that will be. So we got 10 o'clock news up next. Pending home sales. Boy, you got to feel bad for the housing market right now. Pending home sales, 9 months in a row of lower pending home sales. Now remember, pending home sales means it's under contract, right? So it's an existing home, there's an offer on the property, and it just simply, for whatever reason, doesn't get financed, doesn't close. Now, we can assume that a lot of the issues with financing has to do with the Fed stimulus. If you remember, the Fed tapering is dramatically impacting interest rates. So anybody who hadn't locked in a loan terms, when they started cranking up those rates, all the banks jacked the rates up and many people got priced out of the market. So the pending home sales, we've had some very strong new home sales, some very strong existing home sales, but the pending home sales continue to get rocket. I mean, literally, it just shows you how difficult it really is to buy a home right now. If you got cash, yeah, no problem. But if you're trying to finance a home right now, it definitely shows you how difficult it's been to get some closed loans. Of course, the biggest problem has been in the South and the Northeast. And we can imagine how difficult it was. Remember, the states in the southeast of the United States here in the U.S. aren't used to all that snow. So when we got pounded, I have a family up and down the East Coast of the U.S. And, you know, for example, in Washington, D.C., in our nation's capital here in the U.S., they might get a foot of snow every year, but 10 feet of snow every week, yeah, it's going to shut things down. And so nobody's going to be finishing up those new homes. So it's very interesting to see how this weather continues to show us little bits of clues here that I don't think the housing market is off that bad, but I do think this weather is making these numbers really suffer. So now you know what today's news looked like. Kind of back and forth, you know, it wasn't really that strong. I was very amazed, though, to see we didn't get a bigger reaction there at 8:30. Now, one of my favorite parts of our newsletter, This Day in History, March 27th, 1884. 1884. Wow. A good 100 years before I was even born. This long-distance phone call, the first long-distance phone call made between Boston and New York. That, of course, big, important developments, right? Telephone. Then, of course, you can call New York. I can pick up the phone right now, and I can call Sydney, Australia. Just incredible how technology has increased our communication skills. A very somber note here. March 27th, 1964, a magnitude 9.2 earthquake rocks Alaska. Killed 117 people, and it created a tsunami off the coast of Alaska that traveled over 9,000 miles. Guys, you've got to watch this link right here. Click on that link. Watch the video. They've actually, the state of Alaska actually has an archive video on, I don't know how they shot this video, but it is pretty incredible. You can see what a 9.2 earthquake feels like, and it's pretty alarming just looking at it in a video. I couldn't even imagine being there. March 27th, 1998. Now, kids, be sure to ask your parents about this one before you go Google searching this, okay? The FDA approves one of course, my favorite. I can't even say this seriously right now. The FDA approves the drug Viagra, and of course, in 1998, changing the lives of old men forever, right? Absolutely. I will let you guys do your research on that one, but always a fun time here on our nightly newsletters. Kids, make sure the parents are there with you when you search on that one, all righty? Don't tell me I didn't warn you. News for tomorrow. Now that you know what happened today, let's get ready for tomorrow. We have a lot of news tomorrow once again. And as I said last night in the newsletter, we're coming right up into the end of the month, the end of the first quarter. We got a lot of volatility that we're expecting. Today was a day that it kind of caught me off guard. I was expecting a lot more out of these markets today, but we still got tomorrow. We got 7:30 p.m. this evening. So we got some big Red Star news this evening in just about an hour from now as I'm filming this report. 7:30 p.m. we got Red Star news and consumer prices, and then the employment rate a little bit later on this evening. Tomorrow morning, GDP from Great Britain at 5:30. Tomorrow morning, out of Europe, we get economic sentiment. That's Red Star news. So what does this tell us? It tells us that if you're an early bird, or if you're a European trader, an Asian or an Australian trader, we know that you're going to get some great action tomorrow morning in that European session. If you're a U.S. trader tomorrow, I talked about this last night, and we saw exactly what the effect was this in this morning's trade room. All my members of School of Trade, what do we always want to be careful now? When we see London or European news, we're now wondering if the party is going to be over by the time we get to the U.S. Whenever we see high volume and high range coming out of London, it's always a very big clue that we may have a range-bound market. We saw it today on crude. Crude was a great example. We got news overnight on crude today. It jumped the price up. By the time we got to the U.S. session, everybody was exhausted, and we just sat sideways. So remember to watch closely tomorrow morning. If you're in my trade room tomorrow, I'll be watching there with you. We have 8:30 news tomorrow morning. Personal income, that's Red Star News. So we get a big Red Star News report tomorrow morning at 8:30. Remember, Red Star News, find the trade, hold the runner. Red Star News, we know that more people, more volume, more volatility, and more opportunities are going to be involved. And we know that we like to hold on to that big runner when we have a Red Star News. I personally think the big news tomorrow will be 9:55. We always seem to have markets waiting for 10 o'clock. So we'll be looking for some good trades between 10 and 11 o'clock tomorrow morning. I'm hoping we get some great opportunities after that 8:30 news. But if my memory is accurate here, whenever we have that 9:55 consumer confidence, usually those traders are going to wait to see what that number looks like, and they'll place their bets going into the rest of the morning. So we're hoping for some great volatility tomorrow morning. If you're trading the European session, get ready at 5:30. If you're trading the trading the U.S. session, make sure you're aware it may be sluggish the first few moments of the U.S. session, but after we get that 8:30 news, we should be able to get this party started pretty well. So tomorrow morning, just got two news reports tomorrow, 8:30 and 9:55 here in the U.S. You know me, I'll be getting ready with you guys in the trade room tomorrow morning with that. And we probably should mention, too, that tomorrow is a Friday. So Fridays, of course, are always going to be a little bit shorter than normal. Think of it this way. Fridays are just like a Monday, but the exact opposite. Monday is a little bit slow to get started. Friday is a little bit fast to get finished. And it makes sense. The reason why it's a quick finish on Friday is because nobody wants to work on a Friday afternoon. We all want to go to the weekend. And it's even more important these days because if you're trying to trade multi-day right now, it's very, very difficult. I can easily project the next 24 hours, but the next 48 hours, the next 72 hours, I don't know. I feel bad for all those hedge fund managers out there that can't do it that way. So big problem right now, not many professionals feel confident entering a position on Friday and holding it until Monday. If you check your global news calendar, we have big news out of Japan on Sunday night. So I don't feel confident holding my trades over the weekend. I doubt you do either. So Fridays will end very quickly. And we always say after 10:45, usually we start smelling that barbecue grill. The boat gets fired up, right? People start heading out of their desks here, hitting the weekend. So keep an eye out tomorrow after 10:45 a.m. You'll probably see personality change dramatically. Moving forward here, let's grab some charts. Now remember, all of these charts, guys, can be brought up by clicking on each one of these little icons. The VIP chart here today, you can see here that crude oil moved higher on the VIP. Notice we've drawn this convenient channel here, and we've gone all the way up here now to the top of that channel. So crude went overnight from the low to the channel to the high channel and then traded sideways. So here on crude, we got a bullish 2-day, a very narrow range, but look at the volume and the closing print right in the middle of today's range. And you'll notice this little rounded top that we saw here, that's a big sign of a failure here. So I wouldn't be surprised if this thing collapses right back down. But again, my gut tells me it's going to go lower. I don't really trade my gut very often. I trade my patterns. I trade my plan. And I would encourage you to do the same thing. So very narrow range. Now remember what a narrow range means. A very narrow range means a very wide range the following day. So tomorrow might be a very, very busy day on crude. I'm bullish with an opening print above. I'm bearish with an opening print below. I will be looking at selling short here down to that previous high of day at 139. And don't you be surprised if we end up right back to 100 tomorrow afternoon before the weekend. I'm not even going to try to speculate right now where we go on crude. My gut tells me it goes lower, but there might be something coming out overnight that I don't know about yet, and so I'll wait to see what happens for tomorrow. As we keep going here, you can see pretty much the same stuff on our 89 anchor, except I've added in now a resistance zone here at 103.02. So that's going to be the major resistance. If we do happen to go higher tomorrow morning, look for a target at 103.02. And I will definitely be looking for a reversal there if we end up getting up there earlier than later tomorrow morning. As we move forward, we can see here again, we've pushed right into resistance here. So we got this jump up, we're away from the 100, but again, without seeing today's session really confirm that. Now, we didn't drop today in the U.S., but we didn't continue that move that happened in Europe. So that tells me right now that these U.S. traders may not be as bullish as the European traders were, and this may end up coming right back down here to 100 here tomorrow morning. If we do keep going higher, though, you got that 103 resistance. So if you're a buyer right now on crude, 103 is going to be some good resistance. Now, here's that 12 anchor, and here's that rounded top that I was talking about. Now, this morning, this is all we saw in the U.S. This big move up, that was Europe. Right? By the time that we woke up and got to our desks here in the U.S., we had already missed that big move. And then we see this rounded top. That tells me that we're going to likely here pull back overnight, and then we'll look for buying opportunities at this 187 to 167, or at the 122 to 139. Either way you slice it, you've got two buying opportunities here below you. And then I got my profit target up top here at 102.38. Now, I should also mention, and this was written in the text in the blog tonight, I should also mention that we are going to be watching this very closely tomorrow. If we see this pull back, I'm going to give it one, maybe two swings. If it doesn't go, I'm going to resort to the reversal because you know that 100 is going to be on our radar. So I'm going to look for the buy. But all I can do is find the entry pattern. These are all anchor charts. So remember, I'm not just hitting the buy button when it hits that green area. What I'm doing is I'm waiting for the proper entry pattern so I can capitalize on that support zone. The anchor chart tells me when and where to be looking for an entry pattern on my entry charts. I don't give you guys the entry charts on the blog because many of you are not students of mine. And the entry charts are very fast time frames, and they don't have a very long shelf life. So if you look at it an hour from now, it's not going to be worth your time. So these are just anchor charts that I'll use in tomorrow's trade room. Now, so that takes care of your crude. So the big deal right now is, are we going to keep pushing higher, or are we going to collapse back down to that big round number? Now, if you want some big disappointment, how about having a couple $1,000 ripped out of your back pocket? This was tough. We barely missed. Here was the chart that we posted last night. Well, I'm sorry. The trade that we gave you last night was the short here at 13.08. And you can see we went literally 6 ticks, 07.6. So we went 6 ticks, 0.6 away from getting that entry. So if you were good, I mean, you definitely could chase after it, but I always like to get into those zones. I like getting into those zones, and then I find the entry. I'm always worried that if it doesn't get up there, I'm going to get short here. It's going to stop me out, then go up, and then drop. So I like to get myself actually into those areas to make sure that we're actually getting all the reaction there, because that's what you're looking for. You're looking for the sellers to react at that area. So if you don't get to that area, you're not going to get those sellers, you're not going to get the algos, you're not going to get the black box systems kicking in. And you can see, I mean, we have been stroking this gold all week. It's been great, but this one just happened to miss the entry. So this is going to happen. Welcome to being a professional trader. Sometimes you hit them, sometimes you don't. You don't. You know, LeBron James, he's going to miss a jump shot every once in a while. But over the long term, though, he's going to hit more than he misses. So a very good example there of one that we just barely missed. Great trading opportunity, just didn't quite get the bread and butter on it. Now we move down to the VIP chart. Again, we got some great channels here on the VIP, which you can see with your own two eyes. Very narrow range today on gold. Some weird oddball price action on gold today. Although we did go lower, that move happened overnight. Similar to what we saw in crude. The move had already happened, and then by the time we opened up in the U.S., right, we traded sideways. So what I talked about last night on the newsletter when I said that you got to be careful looking at the personality because there was news in Europe, that's exactly what happened here. By the time the opening bell rang at 8:20 on gold, the move had already happened, and then we traded sideways here for pretty much the majority of the U.S. session. So we had a lower move, right? Slightly bearish, not by much. Closing print here. Now this tells me we're still going lower for tomorrow. Closing print at the lows. All right, closing print at the lows. That tells me by the end of the session today, the sellers were still in charge. Notice though the volume. The volume is right in the middle of that range. Okay, volume yesterday was at the lows. So we can kind of see what happens when the closing print is in the middle and the volume is in the middle. It's almost a guarantee that unless something comes out such as news, we should be going sideways. This is a good example though where the volume is in the middle, but the closing print at the lows. So we're going to be bearish, but my gut tells me we trade sideways into tomorrow morning with that volume. All we need though right now is to get that opening print tomorrow below 93, and we are selling short here. We got lots of wide open space. The next support level below me is 1272. So I am definitely looking to sell short tomorrow, but I've got a little bit of concern because that volume print right in the middle looks a little bit balanced. So we're looking for selling opportunities tomorrow with lower lows, but don't force it here. Don't force it here because we're not quite out of the woods yet. We might get sucked back up to that 1300 for tomorrow. Moving forward here, you can see gold finally. This is what we were talking about all week. Finally, gold tests the 1287. Now we've got some significant support, but look closer here though, and you can see we're not quite there yet. So we do still have room to keep going lower, guys. We still have room to keep going lower. And remember, these levels are just places where we expect traders to react. There's nothing written in stone here. So tomorrow, if we see that personality bearish, next stop, 1226. Remember how I said we got 1227, right? Big move down to 1227 on that VIP chart. Very bearish here on gold. And then we got another opportunity here. One more try. We missed that short by a couple ticks overnight last night. Now today, I've got selling opportunities here once again. We'll try it again. I've got selling opportunities here at 1298.4 and 1295.2. I have targets down bottom here at 1285.2 and 1280.9. I don't want to sell at a discount. I want to sell at a premium. So wait for price to go higher before we get short here on the gold going into tomorrow. And then last but not least, I couldn't forget about the mighty mini Russell. Here was where we made our money from last night's newsletter. Gave you guys that entry here at 58.9 to 60.2. Now again, remember, at this area, we're looking to go into that area, and then on the way lower, I'm getting my entry pattern short. Okay, I'm not just hitting the sell button right at 60.2. That would be a little bit ridiculous. So what I'm going to do is take my profit targets down here. This has, guys, over $1,500, 15 points down, right? $1,500 per contract. So a very good trade overnight last night into this morning on the Russell. If you guys were there with me, you made some money there with me. Looking at the VIP chart. Now, we talked about this yesterday in the newsletter, that big range, 350 ticks of range on the Russell on Wednesday. We were expecting to see a bit of a sleepy day today, and that's exactly what we got. We definitely got the price to go lower, that's for sure. It didn't waste any time going lower this morning, but after it made its low and filled those targets for us from last night's newsletter, then it traded sideways here for the balance of the day, pretty much right on top of that previous low of day. So we had an inside or neutral opening bell today. It did open up inside. we closed in the middle of the range, and the volume is near the middle of the range. So very neutral here as we finish the session today. We saw a lower 2-day relationship, and we saw a very narrow range. Now, this narrow range tells us if we get a bullish print, we could be right back to that 81.5. A bearish print, though, and then look out below for a big move tomorrow. We have consumer confidence tomorrow. We've got personal income tomorrow. Very excited to see what this Russell will do. It's been a very, very busy week. If I was the Russell, I'd be due for a margarita, maybe some nachos, and hang out tomorrow. I'll tell you that much. I'd be exhausted by now if I was the Russell. It's been a very, very busy week. So won't be surprised if we see a pretty sleepy Friday, but I'll be very excited to see if this narrow range produces a remarkably wide range like we got yesterday and made all kinds of cash on the Russell yesterday. Now, 89 range. Anchor chart here, you can see we've gone right down to these lows. Now remember, we heard earlier this week that institutional traders are buying the dips in record amounts right now. Well, there's your dip. Now the hard part is that we know we should start seeing some algos, we should start seeing some systems trading kick in here at these lows, but we know that this could be a very wide range of this low, right? For example, I could say we've got anywhere from 41 all the way down to 25. So we've got about 20 points at these lows. So I can't quite say exactly when we make the turn, but I would speculate to say that we're going to be finding buying opportunities starting as early as 1141 and as far down as 1089.1. So we're going to be looking for clues tomorrow, Monday, and then into the beginning of the second quarter, into the beginning of April, to see when we make this turn. I would assume it's going to be earlier than later because of the news we heard earlier this week. But again, I don't trust my gut. I trust my patterns. So I'm going to wait and see what happens here. I'm not quite jumping on the bull wagon yet. All right, I'm still going to be bearish on the Russell until we see that turn. All right, as we go forward. You can see here earlier this week, we talked about selling the break of that wedge. That's exactly what happened. Now we run right into 1141.1. So apparently we have tested the 41.1. Now I can't wait to see what tomorrow brings. Are we going to bounce here and go right back into that wedge? Or are we going to bounce, give us a chance to get short again? Let's take a look. Here now is my fastest of the anchor charts, and you can see we have a short-term price wedge that we found here. I have a selling opportunity now at the highs of this wedge, and I'm going to use the target below at 1143 and the target below that at 1134. So we have selling opportunities right now on the Russell. I'm looking to sell at 1149 or 1154.5. These are both going to be selling opportunities on the Russell. I'll look for the pattern. As soon as I found the pattern, I'm in the trade short. I'm going to take some profit here, though, at the lows of this wedge and, of course, at the seller target down bottom. If this continues inside of this wedge, remember, don't fiddle with the middle. Buy the lows, sell the highs. Buy the lows, sell the highs. So I am still bearish here in the short term on Russell. Selling opportunities here from 49.9 to 49 and 56.2 to 54. And then again, targets down bottom here, which we can see listed as well. So still looking at a slightly bearish there on the Russell right now. Not as bearish we were yesterday, obviously. Excited to see, though, what the end of the week's going to bring tomorrow. All right, guys. That wraps up our nightly newsletter here for tonight. Don't forget, come see me anytime, Monday through Friday, 8 a.m. Eastern Time in our live trade room. Join as a brand new member. Check out our free trial. Don't forget, if you haven't registered for our newsletter list yet, make sure you do that on the left-hand side of the blog, and that way you get all the updates in real time. Join that list right there. Signing off now, guys. I don't do the newsletter on Friday evening, so I will see you guys back here on Monday. And, of course, Monday will be the last day of the month. We have rollover on gold on the 31st. So I will be back to see you guys on March 31st. That is next Monday. Have a great weekend. Have a great Friday. Don't forget to come out and see me in the trade room, and we'll update all the charts. We'll get technically and mentally prepared for our Friday session with all of our students tomorrow morning, starting at 8 o'clock in the morning Eastern Time. Have a fantastic afternoon. Have a great evening. Remember to learn this stuff so you can earn with it, and we'll see you on Monday. Adios, amigos. Bye-bye for now.